Welcome to another S&P 500 analysis. Today is January 6, 2023. There's this old saying, as January goes, so goes the year. So you probably heard of that, and that's called the January effect. And what that essentially is saying is, for the first week of January, it had to be positive, and also the month of January end positively. Then there is a 83% chance the year will end with a gain. So far, thanks to Friday's rally off the non-farm payroll, the S&P 500 ended the week with a gain, and that kept the January effect on a positive note. Now we need to see how rest of the January end up. In this S&P 500 analysis, we will analyze the price action of the S&P 500, the Dow Jones Industrials, NASDAQ 100, and the Russell 2000, and also the Dow Jones Transportation and the New York Stock Exchange Composite Index to see where they are headed. In addition, we'll also look at the sentiment to see how the market participants are feeling about the market and review the market internals to get a gauge of the strength of the market. Then we're also going to take a look at the 10-year yield, the US dollar, oil, silver, and gold, and see how they are doing. So stay tuned. Now, looking at this weekly chart of the S&P 500, as you can see, the range for this week was $111, almost $112. It gained 55 points or 1.45%. It also booked this one-time framing down price pattern. So right now it's doing a one-time framing up. And it could be coming back up to try to retest this trend line here. Although right now it's still close below this 10 and the 40-week moving average. And it is still making this lower high, lower low pattern. If it wasn't for Friday's rally, this week would have been closed with a negative. So all due to the 2.25% Friday's rally to push this S&P 500 to end the week on a positive. Looking at the sentiment chart here, we see the S&P 500 on Friday closed almost 90 points and almost 2.3%. See that it is trying to break out of this consolidation pattern here. So we're going to talk about this a little bit more when we talk about the individual indexes price action later on in this video. And also notice the VIX is still inside of this 20-30 zone here. So the market participants are still being cautious. And again, you know, the put call ratio, it came back down to below 1, it's sitting at 0.9. But we're still questioning about these gyration here. And maybe that's possibly due to the recent change in the OPEX for the S&P 500 and its derivatives. So we're just going to let the market digest this little bit of data for a while and then see how this thing shake out. Because right now, as it stands, I would not read too much into these high value here, just on a daily basis. And here, looking at the up-down volume ratio for the New York Stock Exchange on Friday, it was only 5.2 to 1 in favor of the upside. For such a strong rally, we would anticipate to see at least a 8 to 1 to 10 to 1 in favor of the upside. But although, nevertheless, it's quite respectable, but we'd like to see that higher when you have a almost 3% type of a market, or 2.25% increase in the index. And the advanced decline, the daily advanced decline was actually much better. It showed a broad market advance with 2,273 more advancing issues than declining issues. And for the new high, new low, we're actually seeing more new 52-week high than 52-week low, although it is still below 100 level, but nevertheless, it is positive. So that's a good sign. And looking at the cumulative advanced decline line, you see that it is coming up at quite a steep slope here. So that is also good because it shows that market participation is increasing as the index is moving higher. And here, looking at the NASDAQ market, the NASDAQ 100 closed up almost 300 points or 2.8% on Friday. And it too looked like it's trying to break out of this consolidation pattern here. And again, the up-down volume ratio was only respectable, not great. It's only 3 to 1 in favor of the upside. The up volume, we'd like to see something up here like 10 to 1 or so. if not more. And the daily advance decline, it is showing a broad market advance with 2,150 more advancing issue than declining issues. It is also showing more 52-week high than 52-week low now, although again, similarly to the New York Stock Exchange, although it's under 100, but it still is a positive sign here with the new high outnumber the new low. And here looking at the cumulative advanced decline line for the NASDAQ market, it too is climbing up in a little bit of a steep slope compared to the index. So that is also a good sign, just like the New York Stock Exchange. Now, before we take a look at the yield, let's just take a look at the non-farm payroll report that came out this morning. And that's basically what prompted the market to rally and also the yield to come down today. As you can see, the consensus was 200,000 job, and actually it created a little bit more than 220,000. So it was 223,000. And also the unemployment rate was anticipated to be 3.7, so it came down to 3.5. So that was better than expected, similarly to that non-farm payroll month to month. And the private sector actually was expected to create 175,000, and it actually did 220,000. Then also the manufacturing payroll was expected to be 10,000. I guess it went down by 2,000, and it's only 8,000. So that is a little bit of a sign that the market thinking that the Fed might consider reversing their policy. And also the other thing is the hourly earning on a month-to-month, it was expected an increase of 0.4, and it was actually sitting on 0.3, so actually went down a little bit more than what the market was anticipating. And also the year to year was 5%, and it came down to 4.6. Also, the average hour work week was expected to be 34.4, and actually turned out to be 34.3, so it went down slightly. So again, all these numbers essentially mean you are screwed, all you wage earners. so but the market like it, and they rally up today. And also looking at the yield here, we see that the 10-year actually came down to 3.56% today, and yesterday it was sitting at 3.72, so it came down quite a bit here today. And also just looking at the short term, in the 2-year, we are looking at 4.25, and for the 5, it was 3.7. Here we are looking at the 10 and 2, so we see the inversion between the 10 and 2 is came back up a little bit, so it's slightly less inverted. It's still sitting at minus 0.69. And here's the 10 and 5 is sitting at minus 0.145 here. And looking at the dollar, as you can see this week, it kind of bounced up to this near this 105 area. And then today it came back down to this 104 area here. So we're still looking at the possibility of just bouncing between this area, between 104 and 105. And if it breaks below this 103.80, then we could see it work its way down to somewhere around this 100.5. So we could see a century mark down here, like I said, from last week's video. And for crude oil, as you can see, that it came up and tried to backtest this trend line, and it failed, got rejected. It came back down to this little bit of a high volume node here. So right now it's sitting somewhere around this 73.72. So for the coming week, we could see it possibly move down here to this 69.5 on the downside to this low volume area or this high volume edge here. And the upside would be it could come back up and try to backtest this trend line once again, and possibly try to break this trend line, get back above this 82.76. And for silver, we saw silver was trying to come up to this zone here, this 24.48, and got rejected. Basically got some resistance here, found some resistance at this low volume zone. And right now it came back down and found a little support here in this area, in this zone here, 23.20 area. So right now for the coming week, I'll be watching to see would it be able to make it back above this 24.50 and then pushes up to the 26 area, or will it come back down and retest this zone again for support? And if it break this, then I'd be looking for this thing to come down to this zone somewhere around 2263. We see gold found support at 1833.80 here, this high volume zone here. And right now it appears that it's trying to move up to this 1920 area. So for the coming week, we basically just watch to see will gold continue to move up to this 1920, or will it come back down and retest this zone here, this 1834 area, and possibly this trend line. If it breaks this trend line, then I'd be looking at gold possibly trying to make a move down to back test this 1760. Now let's take a look at the cash indexes, and once we finish with the cash indexes, then we'll take a look at the S&P 500 ETF, the SPY, the Russell 2000 ETF, IWM, and the NASDAQ 100 ETF, the QQQ. And looking at the S&P 500 on this daily chart here, you can see for the first week of January, or for the first week of 2023, the price basically been consolidating down here, except until Friday that we broke out of this consolidation zone and make its way up to this resistance support area here. And it never crosses up to the upper range or come down to the lower range of the weekly expected move. So for the coming week, the expected move that we be looking at will be somewhere between 4,010 and 3,994 for the upper range, and for the lower range, 3,796 and 3,775. And for the possible price action scenario, we'll be watching to see will the price be able to get above this zone here. And if we could get above this zone, then we'll look for this little gap to get filled and then possibly come up and test this trend line once again as it get into the upper range of the weekly expected move. Then on the downside, for example, if it resort back into this zone here, then I'd be watching for the price to come back down to the other side of this consolidation zone and enter into the lower range of the expected move. And if it unable to get a bounce back up and consolidate a little bit more inside of this zone, then I'd be looking for the price to come down and making a move down to this pivot low here, somewhere around 36.98. Now, if we do a little bit of a major move, for example, if this is going to break down and come down and look at this as a bear flag, then we could just do a little bit of a major move and do a projection of where price might be headed. And here at this 100% major move, it is down here at this 35.69, and this is pretty much close to this area here, this support area. So that would be a scenario if this act like a bear flag and break down like a bear flag. Now, if it is act like a just a little bit consolidation zone, and we do a 1x move, then we just do this. Then as you can see, that 1x move is right up at this gap fill here. So that's why we are looking for this gap fill on the upside, and on the downside is make its way down to this area here. But we'll be looking at this pivot low here as the first level of major support. But then it has to move to this lower range of the weekly expected move. And for the NASDAQ 100, we also see that the NASDAQ 100 came up to this support resistance area here this week. So right now it is kind of hovering inside of this zone here. So for the coming week, we'll be watching to see would it be able to move out of this area. And you can see that the price did not come up to the upper range or dip below or into the lower range of this weekly expected move. And for the coming week, we'll be watching for this range here, 11,460 and 11,401. That will be the upper range. And for the lower range, it'll be 10,679 and 10,610. So for the coming week, one of the possible price scenario that I'll be keeping an eye on is for the price to break above this resistant support area and get up to this upper range and into this support resistance zone here near the 11,460 area. And also that would probably come down and try to test this trend line once again. If we project the trend line coming down here. So that would be the upside scenario. For the downside is for it to come back down to this little bit of a consolidation area, or we could also look at this as a little bit of a double bottom if it break away from this pivot high here. But if it come back down and get down to this lower range here, then we'd be looking at this weekly range, the lower range of the weekly expected move to get tagged, then possibly come down and test this October low. Now, again, if we do a little bit of a major move, and assuming this is a little bit of a consolidation area, then we could do just a major move up here, and you can see that the 100% major move of this 1X breaking out this W or this double bottom, it will bring up to the lower edge of this upper range of the weekly expected move. Now, if we treat this as a bear flag, then that's going to be a long way drop here, because if we take a look at the major move down here and project this down, then we basically had to move this up to get it down to see that will be dip below the 10,000 mark, right? Even at the 80%, it will be 9,800 area. So let's see, will we get a price to come up, break this zone, and move up to the upper range of the weekly expected move and possibly test this support resistance price zone here near the 11,460. And here we are looking at the Russell 2000. As you can see, the Russell 2000 is also getting into this support resistance price zone here and have broken away a little bit, come back up to this 1,840 level here, essentially this trend line. So we'll see, will it be able to break this, continue to move up next week and get up to this trend line here, or would it resort back into this zone? Then we're basically looking at the possibility of the price moving back down to this lower edge of this consolidation zone and move down to this 1,700 level and possibly the October low. Now, if we do a little bit of a projected move and do a major move here, and assuming this is the just a little bit of a consolidation breakout, even if we move the box up here, let's see where it's go. And again, you see that's 100%. It will project up to this trend line here near this 1,845. So it's between this 1840. So definitely there's a possibility if it move up, then it could come up to this trend line here. Now, if it is a project down with a bear flag, then we be looking at this possibility and coming down here and do a major move. And you could see that the 100% major move dipped below this October low, and the 80% major move is right near these support level here, these pivot lows. And looking at the Dow Jones Transportation, remember the Dow Jones Transportation, we got this trend line here that we're looking at, this support resistance line here, and you could see that it came up, reclaimed this trend line and booked to this resistance area. So we'll be keeping an eye on it to see will it be able to come up to this 14,133 area and possibly backtest this trend line once again. So that will be the upside scenario for next week. But if it come back down and do a backtest and fail, then we'll be looking for again a test of this 13,453 and then possibly move back down to this 12,894 area. And for the Dow Jones Industrial, we talk about this ascending triangle, and you see that it broke this ascending triangle on the upside. So right now, we're essentially looking for the possibility of price moving up to this 34,280 area, or reverse back and then do a little bit of a failed breakout of this upside and come down and break below, and then we'd be looking at the Dow Jones Industrial moving toward this 31,700 area. So now if we do a little bit of a major move here and try to get this major move on this triangle. So we're basically taking a look at this level here and just project up, and you can see that the 100% major move and also the 80% is right inside of this zone here, right near this zone. So that put it somewhere around this 34,000, 34,200 area. And if we look at it on the downside breakdown, then we'll be looking at this major move here, like a bear pennant. And here come down to this, the 80% is right near this pivot low here. Okay, and also the 100% is right near this little gap here, somewhere around 31,200 area. So keep an eye on these level and also some of these major move and see how they will play out. And here's the New York Stock Exchange Composite Index. You can see that it actually broke out of this triangle here and came up to this zone right here at this 15,500 area. So we'll see would it be able to break above this and come back and test this area here, somewhere around the 16,000 area. This right here is 15,900. So we'll see would it be able to come up here. Then it'd be forming a little bit of a cup and handle here. Or if someone would like to entertain a inverted head and shoulder, that's a possibility as well. But to me, that doesn't look too too normal of a head and shoulder, because this right shoulder is a little bit too small or too shallow. So in any case, we're basically looking at a price move up to this level here, because if we do a major move on this triangle, right, once again, and if we do this here, see what this will project. So you see that it's projecting up right now where it is right now. So essentially it's already done with this major move or this breakout. And if we do a 2x, then that would put it up somewhere around here, I would imagine. Let me just quickly draw a line here. So we're going to do this line here, and I'm going to move it right here. And I'm going to clone it and put it on top of it. Okay. So you can see if it is a 2x, then it would put it up right here at this pivot high. Okay, so that would be somewhere around 16,000. All right. So that is the next projected up move. And right now, we're not going to go and look at this reversal here, because it'd be a different pattern, because we're not going to be looking at a breakdown of this bear pennant. So right now, we're basically looking at this New York Stock Exchange Composite. On the upside, it's possible to get up to this 16,000 level. And if it come back down, then the first low would be looking at will be 15,240, and then possibly back down to this support resistance zone here near 15,000. Now let's take a look at the ETF, starting with the SPY, the ETF for the S&P 500. As you can see, on Friday, it broke out of this consolidation zone and came up to this low volume zone, and this turned out to be the what was a resistance and support area, this low zone here. So right now, we also have some high volume node here. And these high volume node are magnets. They tend to draw price into that area. And the reason is because it has a lot of trading, happen there. And that's the area what we call it high liquidity zone, right? Because price tend to draw into the liquidity area with high liquidity, because that's where business get conducted. All right, so we look at these high volume zone as a magnet that will draw price to that those level. And right now we're essentially looking at the possibility of the price break this support resistance zone and move up this composite volume profile on the control here near 395, and then also the other area is up here near the 399, and then we also have another zone here somewhere around 402. Now let's go and switch over to the 4-hour chart. Take a look at what next week's expected move, the upper range will be. And the upper range for this coming week will be 399.50 and 398.10. And the lower range is between 378.10 and 376. Now, as you can see from this 4-hour chart, price came up to this zone here. And also, we're basically looking for the possibility of a continuation move. And the first level that we'll be watching for is this area here, this 396. This is the composite point of control. And if we could get up here, then look for it move into this zone here, this high volume node. And that is also in confluence with the upper range of the weekly expected move. Now, if it reverse back and dip back into the zone, then I expect it to come back down to this lower range. And that would be between 378.10 and 376. Because the auction theory say if the price come back down from one extreme, then it will auction to the other extreme. Okay, so basically this is the accepted area. We call it balance area. That's where the auction takes place because this represents a high concentration of volume or transaction. If it come back down, then I could do a little bit of a projected move, just do a 1x or 2x and that sort of thing. But right now, I'm just going to do a 1x and just to get some idea where it might lead if it come down and dip below this weekly expected move lower range. Then it could come down to this 370 area, and that would be this pivot low here. Okay, and also right below this low volume zone here, right, on this composite volume profile. And if it dip below this 1x and get into the 2x, then we are talking about this possibility here. Let me draw this on a rectangle, and then we could see that it will be getting into this balance area here, for the price to sort of bouncing around inside over here, and that would essentially push it down to this 357 area. Okay, so that's basically what I'd be watching for the coming week, is to see will price continue to push higher and get up to this 395 area and possibly the 400 into this zone, get up to the 400, or will it resort back and come back in to this consolidation zone and once again consolidate a little bit more, or it might just come down and do a breakdown on this zone and into this lower area here, this next lower balance area. Looking at the QQQ, the ETF for the NASDAQ 100, as you can see, price been consolidating in this zone here, and it still hovering in the zone. And right now, it's still sitting at this high volume node here, which is also turned out to be a little bit of a resistant area. So the price did not get up to this weekly expected move, the upper range, or get down to the lower range. And for the coming week, we'll be looking at this particular range here between 279 and 272 for the, 277 for the upper range. And for the lower range is 259 and 258. And also the other thing is we're going to be watching to see will price be able to finally break away from this zone and move up into this upper range and possibly get up to this high volume zone here, this high volume node near the 282. Now, if it is unable to break away from this zone, then I expect to see price retrace back down and dip down to this lower range of the expected move between somewhere close to 260 and 258. Now, on the major move, if we take a look at this major move as a consolidation trading range break, then you can see this 100% move is in confluence with this upper range of the expected move for the coming week, and that would be somewhere up at the 279. So if we break out of this zone, then we could look at this upper range as a potential target. Now, if it is doing this bear flag type of breakdown, then we are talking about much lower prices here, because if we take a look at this expected move, the major move here at 80%, it'd be down at 241.5, and at 100%, it'd be down near the 233 level. So definitely it will take out the October low if it breaks from this consolidation area and break down as a bear flag. And looking at the IWM, the Russell 2000 ETF, we see that it broke this zone here and making its move up to this upper range of the weekly expected move, but never tagged it. It did not come down to the lower range. So for the coming week, the expected move, upper range is between 184 and 183, and the lower range is somewhere between 172.30 and 171. And as you can see, price is made above this low volume zone here, turned out to be resistant and support area, and right now it's coming up to possibly fill this little gap here. There's a little gap here, and this is near this 178.67, the high volume edge here. So we'll be watching the price come up and possibly move up here into this 183.55, into this high volume zone here in the coming week. And if it could not get above here or get rejected and come back down, then I'll be looking at this 176 area for potential support. If it could not hold that as a potential support and come back down, then I'll be looking at a retracement back into the lower range of this consolidation zone that it broke out from, and that would bring it back down into the lower range of the weekly expected move, and also into this high volume node here, somewhere near the 172 and 171. Now, also, if we do a little bit of a major move of this consolidation zone here, and if we just do a major move between this zone, then you see that 1x will be this 181 coming up here and past this gap here. So definitely will be a possibility of coming up and maybe encounter resistance, or possibly retesting this trend line here and might not get up to this upper range. But first we need to see this trend line to see would it be able to break above that, then get into this upper range based on this major move. So if we are looking this as a bear flag, then we are doing a major move here, and we'll be looking at much lower prices at 80%. That will be pretty close to the October low, somewhere near this 164. And then at the 100%, it will be down at the 161, 160 area. In summary, the first week of the new year was saved by the rally of the non-farm payroll and kept the January effect alive for the upside. Market participant sentiment still in a cautious side, but the internals are holding up. Rally have been accompanied by bond market participation in terms of advanced decline. Now, next Tuesday before the market open, Fed Chair Jay Powell will be speaking, and the market will definitely wait anxiously to hear what he has to say. Will he squash the optimism the market display on Friday based on the non-farm payroll report? Or will he pump the optimism a bit more? We'll see. Be sure to smash the thumbs up if you like the content and also help me promote this video. Thank you for watching and stay safe.